Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all those confusing corporate filings. Today we're diving into a recent report from Nasdaq. No, not the stock exchange itself, but the company Nasdaq Inc. And trust me, even though it's not some juicy scandal, there's some interesting stuff to unpack, especially if you're curious about how the top executives are being paid. Let's just say if you're looking for a job, being a CEO might be worth considering. The main point of this report is about changes to the pay packages for some of Nasdaq's top people. We're talking about the CEO, the president, and the chief information and technology officer. Basically, their contracts got a refresh, so let's break down what that means for them and for the company. First up, Adina Friedman, the chair and chief executive officer. She's staying on until January 1, 2030. Her new agreement bumps her annual base salary to $1,000. That's a lot of money. She also has a target annual bonus opportunity, which is 300% of a Zoni. Seems like a pretty sweet deal. At their dollar, seems like a pretty sweet deal. Now, what happens if things don't go as planned? If Nasdaq fires her without a good reason, or if she leaves for a good reason, she gets a payout. This includes 2 times her base salary, 2 times her target bonus, and a little extra for the year she leaves. She also gets to keep her stock options vesting for 24 months, plus health insurance for 18 months and $45,000 to help pay for financial and tax advice. But wait, there's more. If there's a change in control of the company, meaning someone buys Nasdaq and she's let go around that time, she gets an even bigger payout. She gets a lump sum equal to 2 times her base salary and 2 times her target bonus, plus all her stock options vest immediately. Basically, she's covered if the company gets sold. Friedman can also give the company 12 months notice if she wants to retire. If she does, she'll keep getting paid her salary and bonus during that time. She'll also get a bonus for the year she retires and her stock options will keep vesting. Plus she gets health insurance for 18 months and $45,000 for financial advice. So even retirement comes with some perks. Next, let's look at Tal Cohen, the president of Nasdaq. He's also staying on until January 1, 2030. His annual base salary is $750,000. He has a target bonus opportunity of 200% of his base salary, or $1,200,000. He also gets equity awards with a target value of $6,000 this year. Cohen gets a special one-time equity award. This award is worth $7,000. Half of it is restricted stock units which vest over 3 years. The other half is performance-based stock units which vest in 2027 if he hits certain goals. If Cohen gets fired without a good reason or leaves for a good reason, he gets a payout. This includes 1.5 times his base salary, 1.5 times his target bonus, and extra for the year he leaves. His stock options keep vesting for 12 months. He also gets health insurance for 18 months and $45,000 for financial advice. Just like Friedman, if there's a change in control of the company and he's let go around that time, he gets a bigger payout. He gets a lump sum equal to 2 times his base salary and 2 times his target bonus. All his stock options vest right away. Cohen can also give the company 12 months notice if he wants to retire. If he does, he'll keep getting paid his salary during that time. He'll also get a bonus for the year he retires, and his stock options will keep vesting. Plus, he gets health insurance for 18 months and $45,000 for financial advice. Retirement looks pretty good. Finally, let's look at Bradley Peterson, the Executive Vice President and Chief Information and Chief Technology Officer. His new agreement keeps him on until January 1, 2028. His annual base salary is $650,000. He has a target bonus opportunity of $7,500. He also gets equity awards with a target value of $3,200 for the officer's year. If Peterson gets fired without a good reason or leaves for a good reason, he gets a payout. He gets extra for the year he leaves. His stock options keep vesting. He also gets health insurance for 18 months and $45,000 for financial advice. Like the others, if there's a change in control of the company and he's let go around that time, he gets a bigger payout. He gets a lump sum equal to 2 times his base salary and 1 times his target bonus. And all his stock options vest immediately. Peterson can also give the company 12 months notice if he wants to retire. If he does, he'll keep getting paid his salary through the end of his contract and his bonus for 2027. His stock options will keep vesting, plus he gets health insurance for 18 months and $45,000 for financial advice. Now, it's important to remember that this report is just a summary. The full details of these agreements will be in Nasdaq's next quarterly report. If you're really interested in the fine print, you can check that out when it comes out. So what's the big picture here? Well, Nasdaq is making sure its top executives are well compensated. The company wants them to stick around for the long haul and to keep performing well. All these agreements have pretty big payouts if they get fired or if the company is sold. It means Nasdaq is willing to pay a premium to keep their leaders happy and motivated. These contracts are not only about rewarding past performance, but about incentivizing future success. It shows that Nasdaq is betting on these executives to lead the company forward, navigate market challenges, and capitalize on new opportunities. For investors, it's a sign that the company is serious about its leadership and strategy. However, big payouts like these can also raise questions. Are the executives being paid too much? Are the incentives aligned with the long-term interests of shareholders? These are valid concerns, and it's up to investors these compensation packages. Overall, Nasdaq seems to be in a strong position with a clear strategy and a well-compensated leadership team. The company faces risks like any other, but it appears to be managing them effectively. As always, it's important to do your own research and make your own decisions. Thanks for watching. If you found this video helpful, please like, comment, and subscribe for more corporate deep dives. What companies or filings should we decode next? Let us know in the comments.